Hello, good morning. You're watching Market Cafe on ET now with me, Vinny Motiwala. Along with me is Ankita Saxena as well. Ankita, a very good morning to you as well.
Good morning, Vinny.
What is the handover finally we're getting from the US markets? Earnings are all
absolutely
impacting. That is really impacting the markets, whether global or even the Indian market. But what is the handover that we're getting?
We're getting a mixed handover, Vinny. So yesterday the Nasdaq Composite, which is the tech-heavy Nasdaq Composite, slipped because we are expecting a lot of tech earnings this week and today as well. And there is a slew of corporate earnings that have already been going on, big technology companies that will be reporting their numbers. Wall Street is looking ahead to the mega cap tech earnings. Alphabet, Microsoft, Amazon and Meta are among the high interest names scheduled to announce their results for the first quarter. Now, of the 90 S&P 500 companies earning so far, nearly 77% have topped the analyst estimates. So that's the report card for all the companies in the US. But the tech-heavy Nasdaq index slipped yesterday 0.2%, like I mentioned, on the back of the earnings expectations. The Dow Jones Industrial Average, however, ended 66 points up, and the S&P 500 closed higher, 0.09%, was largely flat but ended the day in the green. Now, after hours, shares of First Republic Bank slid about 20% as deposits stumbled 40% in quarter one. Now, new home sales numbers and the consumer confidence data is also due for release as of today. So that's something that we will be watching out for. In the European markets, European stocks closed mixed amid global earnings. Stock 600 remained flat. DAX was down 0.1%, and FTSE was also largely flat, down 0.02%. Credit Suisse also reported its numbers, suffered net asset outflows of $68.6 billion during its first quarter collapse. And in an interesting turn of events, while we are seeing a global slowdown, Louis Vuitton has become the first European company to surpass $500 billion mark in market value.
Absolutely, Ankita. That's the update coming in from the global markets. But let's just talk about what crude oil prices are doing. We're seeing that crude oil prices have seen a bit of a rise this morning. Brent crude oil prices trading with gains of almost 0.5%, around the 0.5% mark, mainly because why? We're seeing the dollar that is weakening in trade as well. And that is something that is supporting the crude oil prices, as caution is set mainly that central banks will be taking rate hikes. That is a bit of a worry that is coming in for the oil prices. Other than that, the key economic indicators over the coming weeks also is something that we're watching out for in terms of the data from across the globe is something that we should keep an eye out on. Now, even Chinese travel demand that has seen a recovery sharply ahead of their May holidays that are there in China, particularly through the increased bookings and trips abroad. But the number of was still below the pre-COVID levels, but that does increase in terms of the consumer-wise. China is one of the top consumers of oil, and that will increase the oil demand in China as well because of the holiday season that is there. So keep an eye out on that one, because Chinese consumption will fuel the recovery in terms of the demand over there, and maybe we could see oil prices inch up higher as well. Keeping an eye out on that. As of now, WTI crude oil, Brent crude oil, both sitting with a bit on the positive side.
All right, then, Vinny, as we mentioned at the start of the show, that we are in the thick of the earnings season. So for the events that we need to keep an eye out for, it is the earnings that will take the center stage. Well, for the Nifty 50 companies, we have Nestle and Tata Consumers that will be coming out with the earnings. And amongst the other companies, we have HDFC AMC, we have Mahindra Holidays, we have Mahindra Lifespace, Mahindra CIE, Rallis India, AU Small Finance Bank, KPIT Tech, Dalmia Bharat that will be coming out with Techwater earnings. And also we have the big IPO action that's happening today. Mankind Pharma IPO will open for subscription today and will last till the 27th of April. That's the last day to subscribe to Mankind Pharma. Also, in other corporate actions, we have Asian and Granito that will be holding a board meeting to consider raising funds. And in the global news, we have, of course, the US consumer confidence that I mentioned, data that will be coming out today. And we have Pepsi, General Motors, General Electric, McDonald's, Microsoft and UBS that will be coming out with their global earnings, and we will be tracking that very closely.
Absolutely important global earnings to watch out for as well. And what is the India commentary is going to be a key factor that we're keeping an eye out on. Moving on, let's just talk about the troubled lender First Republic. Now, the deposits tanked nearly 41% to $104 billion in the first quarter, which witnessed the collapse of another mid-sized bank. However, the lender has in fact gone ahead and clarified that the deposit flows since have stabilized.
And staying with the banks, European lender Credit Suisse reported net asset outflows worth $68 billion during the first quarter collapse that eventually led to the emergency rescue plan involving rival UBS. Now, the Swiss lender has posted a one-off profit on the back of the controversial write-off of the AT1 bonds as a part of the deal.
And from the news world in the US, right-wing primetime host Tucker Carlson has decided to part ways with Fox News. The announcement comes days after Fox's parent company settled a $787 million defamation suit. Now, Carlson's program, Tucker Carlson Tonight, has been one of the long-standing top-rated shows on Fox News.
And in the latest on the layoffs, Disney will begin a second wave of layoffs involving thousands of roles as a part of efforts to eliminate as many as 7,000 positions and save $5.5 billion in costs. And the job cuts, thousands in latest round of reductions, will be bringing the total number of jobs culled to 4,000 and are said to occur across entertainment, ESPN and Disney park experiences and products.
BlackRock is maintaining a bullish view on the emerging markets amid the Federal Reserve's bid to hit the peak of their interest rate hike cycle. Now, this is on the back of favors China of economic reopening and the end of the emerging market rate cycle hike as well.
And Apple wins an appeal in court ruling upholding its App Store policies. The court sided with the company over its App Store rules in a suit with the Epic Games. This decision implied that Apple's control over the App Store and the fees it charges won't significantly change due to the legal battle.
And let's get some update from the luxury market. And we're seeing the luxury goods giant Louis Vuitton becomes the first European company to surpass $500 billion in market value. Thanks to the booming demand for luxury goods in China and strengthening euro, the milestone comes 2 weeks after the company joined the list of world's 10 biggest companies, largely led by the surge in the first quarter sales.
And as the Sudan conflict refuses to show signs of slowing down, India has finally begun evacuating its standard citizens from the nation. India's External Affairs Minister S. Jaishankar informed that Operations Kaveri is underway to evacuate Indians stranded in Sudan. Sharing pictures of the rescue operation, the minister tweeted that about 500 Indians have reached Port Sudan and more on the way. Indian ships and aircrafts are set to bring stranded Indians back home. Meanwhile, 5 Indian nationals were also evacuated through French Air Force flight and were brought to France's military base in Djibouti.
And according to the latest US Census data, the Indians now have an average household earnings of over $1,700. That is almost rupees 80 lakhs. The median earnings for of the Indians there is nearly doubled in the nationwide average of $63,922. The infographic has the US Census Bureau data of 2013 to 2015, the American Community Survey, where Indian Americans stand on the top of the list, followed by Filipinos and Taiwanese Americans, and the Chinese Americans are lower on the list with a median income of $69,100. And the data also highlights that 70% of Indian Americans' population in America holds a bachelor's degree, while the national average is just 28%. It must be noted that Indian Americans constitute 1.35% of US's population and pay more than 6% of the country's total taxes.
And on that note, it's time for us to slip into a short break. Don't go anywhere. We go domestic on the other side. Hello and welcome back to Market Cafe, and we'll go domestic and onto an ET now, exclusive now. We learned from reliable sources that JSW Group is in talks to pick up stake in MG Motors India. My colleague Ajay Sharma joins us with more details on this. Over to you, Ajay.
Well, that's correct. We are gathering from our sources that JSW Group is actually in advanced stages of discussions to pick up a stake in MG Motor India. They are likely to pick up a stake which is just under 25%. In fact, they are also in talks with BYD India for business tie-up or some kind of a transaction. But compared to BYD, the stages of negotiation are much more advanced with MG Motor India. The idea here, what we understand is that JSW group is very keen on EV business, and they have been on the public platform to announce that they are keen to scale up four-wheeler EVs. And by this transaction, they will gain access to technology. So EV technology is something which they are eyeing. We understand from our sources that MG Motor India business is being valued at closer to $3 billion. And whatever funds which will be raised under 25%, a couple of thousand crores will be used by MG Motor India in its expansion plans. And it is all known that EV, models of MG Motor India are doing very well. They have very advanced technology. So that is what JSW Group is very keen on, actually learning and getting associated with via this particular transaction. So we reached out to JSW Group regarding this story of ours, and they declined to comment around this. And we also reached out and sent messages to MG Motor India MD, but we did not get any response. But we understand that these discussions are happening, and a deal is likely to be happening and being announced in the next 1 to 2 months.
Okay, that's an exclusive detail, but we also spoke and caught up with market expert Mahantesh Sabarad for understanding the implications of this on the market. Let's go across and listen in.
So there are the only synergies that I can think of as far as JSW is concerned is that there are major business being steel business. The automobiles is something which will consume a lot of steel. That apart, JSW Ventures, which is into making small investments, has taken bits and pieces of $2 million, $3 million kind of investments in startups, EV kind of startups, to something in the e-commerce space related to cars and etc. But I really doubt whether they have the capacity and wherewithal to run a full-fledged kind of automobile company, even from a strategic investment perspective, not really from a 100% control perspective. That seems to be a bit surprising coming from such a steel company who themselves have a large capex plan.
All right, moving on then. Pharmaceutical company Ipca Laboratories is eyeing stake in Unichem Labs, close to 1/3 of the Unichem's share, worth over 1,000 crore rupees. Now, it is said to be sold to Ipca. My colleague Shrishti is here with all the details of this deal. Over to you, Shrishti.
Well, yes, a big news coming in from the pharma space, wherein two Indian pharma companies are in focus, as Ipca Lab is eyeing to have a majority stake in Unichem Labs, and they have already announced a deal of acquiring 33% stake in Unichem Labs. Both of these companies, if we see, are export oriented. But firstly, let's talk about the deal. And Ipca Labs is acquiring 33% of the stake from the promoter, wherein Dr. Amrut Modi, who holds around 46% of the stake in the company, is offloading 33% of that at a price of 440 rupees a piece, which is 13% premium to the last closing price. And the other 26% Ipca Lab will be coming up with an open offer. That open offer price is also 440 rupees, and that will translate into an overall acquisition cost of close to 1,800 to 1,900 crores. Now, talking about the deal value, then this is valued at 2.5 times of the sales. And do remember that Unichem is a net cash company. This was about the deal. When it comes to the synergies, then as we know, both of these companies are export-oriented. While Unichem Labs has a major presence in the US, drives 60% of their revenue from the US markets, while Ipca has the majority chunk coming in from the European market. So definitely definitely this deal is seen to be opening the gates for IPCA when it comes to the US markets. And not just that, the product range of both of these companies also complement each other, so a synergy benefit coming in on that front. But when it comes to the analyst take, then they see not just access to the US markets, but FDA approved facility is also a thumbs up for acquiring Unichem Labs. As API raw material inflation settles, then Unichem margins are expected to expand, but this could drag the IPCA Labs margins in the near term. And lastly, this deal appears to be prima facie on the higher side of the valuation is what they believe, but that is the big news coming in, wherein IPCA Labs is eyeing a majority stake in Unichem Labs. Back to you.
Absolutely. Let's keep an eye out on both IPCA Labs as well as Unichem today in trade as well. Also, IndusInd Bank, that delivered its Q4 numbers, a steady earnings that has come in line set of numbers in Q4, especially in terms of profit and the net interest income of the company. Let's hear a word that is coming in from Sumant Katapalli, the MD and CEO of IndusInd Bank, on what is he expecting from the bank going forward. What should we be expecting in terms of growth?
Indian economy remains a bright spot in otherwise weak global economic outlook. Overall, for the full year, credit growth accelerated across the board to 15% from 9.6% in financial year 22, outpacing deposit growth of 9.6% with incremental CD ratio rising over 100%. Amidst the bank failures in the US, the Indian banking system remains sound and healthy, with strong capital and liquidity positions, improving asset quality, better provision coverage, along with improved profitability. Coming to the bank-specific development, our execution in PC5 and for the quarter has been in line with our communications during the year. Deposits had healthy momentum. Overall deposit growth was 15% year-on-year and 3% quarter-on-quarter. The retail deposit momentum continued with 4% quarter-on-quarter growth, with 43% of the deposit coming as per Basel III LCR norms in retail.
All right, then after the numbers that came in for IndusInd Bank, we also have the brokerage notes coming in, and let's see what the brokerage notes have to say when it comes to IndusInd Banks and the view that they have. First up, we have Macquarie that's maintaining an outperform stance with a target price of 1,510 rupees per share. Now, Macquarie says that, they see a strong outcome for FY23. We did see the IndusInd results come out yesterday, and the numbers looked pretty good. They were pretty in line with the street estimates. Macquarie also says that it is time to sustain a strong FY23 outcomes. They see a strong year, and also their ROA stood at 19% for quarter 4 for FY23, and the granular retail growth was the key for FY24. 24-26 planning, and based on that, Macquarie is maintaining an outperform on the stock. Also, JP Morgan came out with its view. JP Morgan says that there is a strong growth and asset quality, strong growth, and there are, however, a few blips in the asset quality, and the quarter 4 PAT, which was at 2,000 crores, was 4% below their estimates. Also, they feel that the core PPOP growth was driven primarily by their loan growth, and they feel that their reported NIMS was pretty stable on a quarter-on-quarter basis, and they also saw a slight hike in gross slippages to 2.4%. And they do see the slippages, though, moderating towards quarter 1 onwards to more than 2% levels. So that was the view coming in from JP Morgan. And finally, DAM Capital has maintained, they have retained a buy with a target price of 1,510 rupees per share for IndusInd Bank. They feel that the IIB is back on track post the COVID impact, and bank is focusing on improving their product proposition, and they also see a 20% earning growth over FY24 to FY25 estimates.
Okay, that's the brokerage this morning, but let's keep focus on IndusInd Bank, because IndusInd Bank is planning to enter into the mutual fund, insurance and broking space. ED now learns that the bank will soon apply for licenses to the RBI, IRDAI and other regulators as well. Let's go across to my colleague Ankur Mishra, who's here with more details on this. Ankur, please give us an update on what is happening in terms of IndusInd Bank entry into the mutual fund space.
Yes, IndusInd Bank wants to go beyond banking, and what we have understood through sources is that the bank wants to venture into mutual fund business, insurance business, as well as broking business. Now, for all these businesses, you need to apply for licenses, and sources have indicated that the process of applying the licenses will begin in few days. In fact, the first application is likely to be sent to Reserve Bank of India in few days, and after that, SEBI, IRDAI, and other regulators are likely to be reached out, so that first step of obtaining the license can be done, and after that, as when the approvals come, these businesses will be started. Apart from that, the bank also has plan of starting its own digital bank named Indi, and in that the bank feels that after these licenses are obtained, there will be a greater platform to expand these businesses. However, it all depends on the approvals when it comes, and it is likely to take 1 or 2 years for the bank.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We get you all the stock specific action on the other side. Welcome back. You're watching Market Cafe. Now it's that time of the show where we get you all the stock specific action, and we have Ashesha in the studio with us. Ashesha, tell us what are the stocks that you have been keeping on your radar, and what are the stocks that we need to keep an eye out for?
Hi, good morning. So let's start off with an earnings candidate, and Century Textiles will be in focus on the back of its results, which it reported yesterday post market hours, where revenue from operations for the quarter gone by stood at 1208 crores, which is a downtick of a marginal 0.5% on a year-on-year basis. Margins meanwhile have contracted. Company has reported margins at 10% versus 10.3% that the company had reported same time last year, indicating a contraction of 30 basis points on a year-on-year basis. Mahindra Lifespaces meanwhile will also be in focus, and that is because they have been selected as the preferred partner to redevelop a residential society which is located in Malad, Mumbai. The land is measuring approximately 3.7 acres, and revenue potential stands at about 850 crores. So on the back of this project that has come in, Mahindra Lifespace will also be in focus today. Let's also talk about IIFL Securities, and this counter will also be in focus on the back of its results, where revenue from operations have seen an uptick of 16% on a year-on-year basis. As far as profit after tax is concerned, it stood at 86 crores versus 78 crores that the company reported same time last year, indicating an uptick of 9% on a YOY basis. They've also approved fundraising plans to the tune of $5 billion via bonds, and this will be done on private placement basis. So on the back of results, as well as their fundraising plans, also keep an eye out on IIFL Securities. Moving on to Wellspin India, where the board of directors will be considering buyback along with fourth quarter results in the meeting that is scheduled to happen on the 27th of April. And lastly, Poonawalla Fincorp will also be in focus, and that is because CRISIL has upgraded rating for its long-term debt instruments and bank facilities to CRISIL AAA. So on the back of this upgrade that has come in from CRISIL on its instruments, Poonawalla Fincorp will also be in focus today.
Okay, Ashesha, thank you so much for all the stocks to watch out for, but we'll continue with that because we have two nifty companies on the FMCG side that will be reporting their numbers. Firstly, let's start with Nestle. Now, Nestle is expected to report a decent set of numbers this time around. In terms of revenue growth, we're expecting an 11% revenue growth coming in from the company from the Jan to March quarter. So it's Q1 calendar year 23 numbers for Nestle. So let's keep an eye on that one because profits are expected to see a slight bit of a decline of 1%, while margins are expected to see some pressure as well because of the inflationary trends that we've seen continuing in the milk prices. So that does impact the dairy and confectionery products of Nestle. So because of that, impact on margins will be there. Gross and EBITDA margins are expected to see a contraction due to this inflation. In terms of volume growth, the company doesn't release a volume growth number, but normally we come out with an inferred number according to analysts as well. This time around, we're expecting a volume growth around 3 to 4%. We expect that the momentum that is there in terms of the growth that will continue in Nestle, and noodles as well as the biscuit categories are expected to remain quite resilient compared to the other categories as well. Let's watch out for commentary in terms of rural consumption, out of home consumption, commentary on raw material costs, as well as any demand trends in terms of packaged goods is something that we are keeping an eye out on from Nestle. Let's move on, talk about another FMCG company, that is Tata Consumers, that will be reporting their Q4 FY23 numbers. This is on a consolidated basis. Year-on-year basis, we see a revenue growth of around 10.6% is what we're expecting. Profits expected to see an increase of around 18%, while in terms of the EBITDA, we're expecting a slight bit of a contraction there of 30 basis points, mainly because of the inflationary trends that are still impacting the margins of the company. Double-digit growth, which we're seeing in the revenue, mainly is going to be led by the food business. Food business, the growth is led by pricing growth because we saw price increases coming in the salt business. So overall, food business will be leading the growth. We're expecting a more than 20% growth for Tata Consumers in terms of food business. Keep an eye out on that one. We are expecting Nourishco to see a strong performance as well. And tea business is expected to start seeing a gradual recovery. Don't forget the tea business was under pressure in the last couple of quarters. So we're expecting a gradual recovery and a mild growth of around 1% that we could see coming in from the tea business of the company. International beverages, that could be muted because of the inflationary environment that has continued even there, and inflationary pressure is still a bit of a concern for Tata Consumers, but at least not that much of a decline that we saw in the past as well. Keep an eye out in terms of any factors to watch out for. Overall business margins of the company, market share, especially in the tea business, as well as the top line growth in the food business. How is that working out is something that we're watching out for, Ankita.
All right, then, Vinny, moving on, Poonawalla FinCorp will be in focus after CRISIL upgraded the company's long-term rating to AAA stable. This comes a few months after a big upgrade from CARE. Now, how will this aid the bank's borrowing ability? Well, my colleague Vamakshi is here to explain exactly that. Over to you, Vamakshi.
Poonawalla FinCorp is in focus after CRISIL has upgraded the rating for long-term debt instruments as well as bank facilities to CRISIL AAA stable. Now, if you remember earlier on 30th September 2022, CARE Ratings had upgraded the long-term rating to CARE AAA stable as well. Now, there are some other NBFCs, let's look at them, that do have some AAA ratings, that is include Sundaram Finance, M&M Financial, SBI Cards, Bajaj Finance, L&T Finance Holdings as well as HDFC. Now, it is important to note how do the borrowing costs actually move with an improvement in the credit rating. So now when we look at Poonawalla FinCorp, we did see that on the earlier upgrade that it had received from CARE Ratings, it actually allowed the corporation to get most of its banking loans repriced at lower rates. It also enabled the company at that point in time to tap into diversified sources of borrowings, and this in turn led to a marked improvement in their liability franchise. On the back of that, we also saw that the cost of borrowings saw a dip. In fact, they're down nearly 160 basis points since the second quarter of FY22. And in fact, with that at nearly 7.5% as the average cost of borrowing for Poonawalla FinCorp, it is the lowest cost of borrowings, amongst the lowest cost of borrowings rather, in the NBFC space. Now, when we look at how the borrowing cost has actually moved for Poonawalla FinCorp in the second quarter of FY22, we did see that the company saw a two-notch increase in credit rating to AA plus stable by CARE. At that point in time, the cost of borrowings was 9.1%. After that, in the next quarter itself, it was assigned AA plus stable credit rating by CRISIL, wherein the cost of borrowing fell from 9.1% to 8%. Similarly, we saw that despite the rate hikes, the cost of borrowings actually fell down to a low of nearly 7% in the first quarter of FY23. And despite the hikes that came in after that, the credit cost has only inched up by 50 basis points since to 7.5% currently. So largely, when we look at the credit ratings that come in, an improvement in credit rating is a positive signal for most companies as it leads to lower cost of borrowings for them.
Okay, Vamakshi, thank you so much for that update on Poonawalla FinCorp. But let's move on and talk about one of the most anticipated IPOs of the year, and that is Mankind Pharma. It's set to open for subscription today. The company is allocated about 1.2 crore shares to 77 anchor investors at 1,080 rupees per share. Let's go across to Shrishti, who is here to tell us more about the details of Mankind Pharma, what should be expecting from the company in terms of the IPO as well. Shrishti?
Well, yes, Mankind Pharma opens today, and that will be open till 27th of April. And after a long time in the pharma space, this particular IPO is coming. So a lot of investors are looking out for it. When it comes to the IPO size, it is at 4,326 crores, which is a completely offer for sale. Promoters and investors offloading their stake. Coming to the Mankind Pharma dominance in the Indian markets, they drive 97% of their revenue from India, and not just that, second largest in terms of the sales volume volume as per FY22 stats. When it comes to the valuation, with this particular IPO is coming at not looking that expensive, trading at 29 times 1 year forward PE, which is a little bit expensive when compared to the Nifty Pharma, but rest of the peers from the large cap space not seen to be that expensive as well. But when this particular company is being listed at the higher end of the price band, which is now at 1,028 to 1,080 rupees, this will be the 8th largest Indian pharma company as per the market cap, having market cap over 43,200 crores. So all eyes on Mankind Pharma.
Now, well, in an earlier interaction, my colleague Ajay caught up with the company's VC and MD Rajiv Juneja to understand the outlook going forward and the plans post the listing. Let's take a look.
In chronic side, our contribution is 34%. We have good contribution in consumer side as well. And as I said, our focus is towards chronic side. Our focus is towards consumer side. And you can see yourself in the shape of Manforce, in the shape of Praga News, you can see Gasophas, you can see Acne Star, you can see Health OK. One after another, our products are making some kind of a mark in the industry.
Okay, let's move on and talk about CG Consumers. Now we are seeing a resignation, an appointment elevation that is coming in, a rejig in the management, you could say. Let's just talk about that first. Now, what is happening here is that Matthew Job has resigned from the position of the executive director and CEO to pursue other careers. Mr. Khosla has resigned from the post of the MD as well and elevated to the Executive Vice Chairman post, and this is going to be till the 30th of April 2024. Now, post this, Mr. Khosla will be providing valuable counsel and advice to the new MD in terms of the strategic matters and support the integration of Crompton Greaves Consumer Electricals with Butterfly Gandhimati as well. Let's not forget that, Mr. Khosla was already set for, in terms of a resignation coming, in terms of his time for the period. It was already set to retire by December 25. But yes, now post December 25 until December 25, he will be serving as a non-executive vice chairman as well after April 2024. So keeping an eye out on that one. Let's talk about in terms of the new MD CEO who's been appointed, that is Promeet Ghosh, is taking over as the new MD and CEO. This new CEO has a 3-decade experience in spanning of mergers and acquisition, investment banking, private equity investing, and his most recent position was as the deputy and head of Temasek as well. So let's keep an eye out on that, because in this management transition, the strategy and key is going to be, and we're going to be watching out for how long Mr. Ghosh takes to settle into his new role, whether this actually brings about any changes in the mid-level management as well, and how the board ensures that Mr. Ghosh's interests are aligned with that of the company, and whether the company continues to focus on boosting the top line growth. That is something that we'll be watching out for.
All right then, and in a major Nifty earnings to watch out for tomorrow, Bajaj Auto will see another quarter of margin contraction despite price hikes. Now the street is expecting a muted Q4 earnings aided by the decline in volumes. Let's go across to my colleague Shrishti Sharma to get a preview of that. Over to you, Shrishti.
Well, yes, absolutely. Two-wheeler major Bajaj Auto slated to report its numbers. When it comes to the volume front, the exports have been the biggest drag to their numbers this time around, 21.5% decline on a sequential basis, and that's exactly what the numbers will get impacted from, because this time around on a sequential basis we are expecting largely a single-digit decline on their overall number front. Firstly, when we talk about the revenue front, almost a 10% decline we are expecting at 8,412 crores. Coming to their EBITDA number, 11.5% decline on a sequential basis at 1,571 crores is our expectation, and the margins are expected to cool off from 19.1% back in Q3 FY23, which was a record number for the company, and this time around we are expecting this number to be at 18.7%. Coming to their profit figure, 5.5% degrowth expected at 1412 crores is the number of profit expected from the company. But like you were mentioning about the volume growth, definitely export has been the biggest drag. But other than that, domestics have been supportive. 125cc plus segment did well. Three-wheelers were supported, and that's expected to impact the margin profile of the company. Coming to the exports demand, that was impacted due to availability and the devaluation of the forex. But like I mentioned, the key highlights and the key factors to watch out will be the margin front as well as the outlook on the exports, because back in Q3 the company guided that from Q1 FY24 onwards they are expecting some build up on the exports front, starting from the Latin America market going to the African markets as well. So any positive commentary on that front will be a key thing to watch out for. And other than that, the guidance on the margin front will also be what we are looking at. The stock is already trading at 52-week high levels, so all eyes on Bajaj Auto.
Okay, that is what we're watching out for in terms of numbers from Bajaj Auto as well. On that note, it's an end to this edition of Market Cafe. But as we go and end this Market Cafe edition, the Jairani CIO at Helios India doesn't have ethos in the portfolio. He further tells that he has an exposure to the car distributors in the luxury space as well. Let's go across and listen into that snippet. It's a goodbye from Ankit and me.
We talked about the luxury trend that we picked up again quite early in our in the trade as such, and the point is that the demand per se is not looking that exciting, be it in the tier 1 towns or tier 2 towns or even the rural segment, because I think there's a pullback on demand to an extent, and we again saw this probably early, and that's why we trimmed a few positions. And now we're adding back to those names where we saw that the corrections have been overdone, and we've been adding back to those names as such. So otherwise, new names, we're not looking at, we're not being able to find any new names as such.
So it was Manyavar, it was Campus Shoes and ... Ethos.
No ethos.
So Manyavar, Campus and fill in the blanks.
I won't. That I'll leave to
As a child, we played this game, fill in the blanks. Remember all the exams, fill in the blanks.
I know. Some of them you showed just now, the retailer, the car distributor and stuff like that. So that one was there. So.
But Dinshaw, there is definitely an uptick in the urban stroke, the niche consumption pocket. But that is also a function of the real economy. That is also a function of what is happening to the aggregate picture. How disconnected do you think this space will be for an extended period of time from the real economy?
So, because actually, if you see, this kind of a dichotomy was happening for quite a while, even during COVID times, though everything picked up. But the fact was that the super luxury and luxury were totally in demand. And as I mentioned in one of your interviews, that the watches, you can't find luxury watches. They're out of stock. Patek Philippe or Rolex and stuff like that, they're really out of stock. So it's that kind of a super luxury wave which has come. And I think that's basically because of the way the income spreads are happening today. So, but the fact